Friday, April 2nd, 2021, Maneco 64, home of alternative economics and contrarian views. Today is Good Friday, of course. The markets are shut, but we're going to look at whether gold and silver have bottomed. It's always difficult, of course, to call a bottom, but I think I've ascertained that there's a few indicators, technical indicators, that are showing that gold and silver have bottomed. And of course, I always tell people that I try to dollar cost average physical gold and silver, and the price of physical gold and silver in the retail and even wholesale market has been very different from what's going on in the paper market, on the futures, or the spot market in the LBMA, or the foreign exchange market, really, because gold and silver are traded as currency pairs, XAU USD and XAG USD. They're traded interbank. Yes, there's a lot of shenanigans and manipulations in these markets, mainly because the foreign exchange market itself is a house of cards, is a very manipulated and leveraged market. It's not only gold and silver that are conjured up out of thin air and traded with leverage. It's also the fiat currencies, the paper dollar, the paper pound, the euro. All the currencies are highly leveraged, and gold and silver are caught in this. How can I say, in this environment? But for those of you who have been worried about gold and silver, of course, and things in life are never certain, even though I personally think that there's only one way for fiat currencies to go, especially when we see central banks, governments, and even the IMF now creating money out of thin air ad infinitum, counting on debt to be the savior for economies, and not trying to implement policies that are actually beneficial to the general public, to economies like free markets, small government, and sound money. And that's one of the reasons why I keep holding my physical precious metals, gold and silver. That's why I keep trying to stack as much as possible. If I am able to get a surplus of fiat currency through what I do, through trying to keep a tight economic ship at home, income and expenditure, having a surplus. After all, the word economy comes from the Greek, and it means household. It's like managing your household, and that's all it is. So nevertheless, we're going to look at these technical points here for gold and silver, and I think it looks like they have bottomed. It's always tough, as I said, to call a top or a bottom. So the first one we're going to look at is the Fibonacci retracement, which we've looked at in the last few weeks. We've held a key Fibonacci retracement of 38.2% here in gold, from the low, actually, in December 2015 to the high last year, from around 1,046 to 2,075. The 38% retracement, as you can see here, is around 1682. Yes, we bottomed in the last few weeks, and in March, really a couple of times in March we bottomed just around 1675. So very close to that 1682. I would say that is a good match there, considering it's a 5-year chart, a 5-year period. So nature, of course, isn't perfect, but I would say that's a pretty good match there, the 38.2% retracement. And we've got this trend line here on the weekly chart that's holding. That trend line is also part of the teacup if you look at a longer term monthly chart. So those two are good indicators that I've been speaking about in the last few weeks. But I found another one, and the only reason I found it only now, it's because it's on a weekly basis. And I've referenced this old book I have, Technical Analysis Explained by Martin J. Pring. I've had this since I started out in the city of London as a futures and options broker. I was always trying to learn new things so I could advise my clients as well as possible, not just through the fundamental analysis of markets, but also technicals. So what I found here is what's called a reversal phenomena. And it's to do with Japanese candlesticks. I'm not going to go through the history of the candlestick and the Japanese market. It has to do with the rice traders in Japan, and they kept track of the prices, and they had these candlestick formations that helped them determine the direction of the market. So we've got a hammer here. So what's a hammer? Well, there's a hammer and a hanging man. They're both similar. They look the same, but they are at different junctures in the market. So I'm going to go through the whole thing here. It's not very long, about the reversal phenomena, hammers and hanging men. In Japanese, it's called takuri and kubitsuri. So these formations have probably gained more notoriety than all the others because of their imposing titles. A hanging man is an umbrella line that develops after a rally. It looks rather like the body of a man and dangling legs. As its name implies, it is a bearish pattern. If a hanging man appears after a prolonged up move, it should be treated with respect, especially if it occurs after a gap. A hanging man can be identified by the fact that the shadow or wick is at least twice the height of the real body. The color of the body is not important. So now this is the one that I think we have here, the hammer. So what does Martin Pring say about the hammer? He says a hammer is identical to a hanging man, but occurs after market decline when it is a bullish sign. It gets its name from the idea that the price is hammering out a bottom. In effect, it represents the kind of trading day when the price temporarily slips quite sharply, for there is a run on the selling stops. Nevertheless, the technical position is sufficiently constructive to cause buyers to come into the market and push the price back up toward or above the opening level. So in this case, of course, it's on a weekly basis that I've looked at this. It's not on a daily basis, but it applies to it as well. So let's have a look here at the hammer in gold. So we've had weeks of the market falling. It's actually started in the beginning of the year, as you can see here, because late last year, gold bottomed around 1765, and then it rallied into the beginning of this year towards 1958. So, and it looked like it was breaking out, but it's been since, let's say, the beginning of the year that rally failed, and we've been going down ever since. And as you can see here, this week we have a hammer. So on a weekly basis, what this means is that the market had a really big drop during the week, but it was able to close near the highs and near where it opened in the beginning of the week. So that is a potential hammer there. And as you can see, we also touched that trend line and the Fibonacci 38.2 retracement level as well, all in the same week. So this is potentially a bottom, according to candlestick analysis, according to Fibonacci retracement. and according to the trend line as well. So it's a potential bottom. Am I saying this is for certain? No. Am I giving advice for traders out there to go long gold futures or whatever paper instrument you use? And of course, this is not me changing my view that the only way to have or own gold is through physical gold and silver. But there are many of you out there who like to trade, and I'm not against that. I do trade sometimes as well. Yes, your profits will be in fiat currency. I guess you can always try to take those profits and cash them in for real cash, right? Which is gold and silver. A lot of people talk about what we call cash today, like the Federal Reserve note or the Bank of England note. But those are not really cash. Historically, gold specie or coin and silver are cash, right? So what about silver? Have we got the same conditions? Yes, I would say so as well. Maybe not so much in the trend line department, but we've had also the same candlestick formation here. We've got a hammer. And silver has been slightly different because we topped in the beginning of February with the Wall Street bets and silver squeeze phenomenon. I still think there's a lot of physical demand. I think that was just the beginning of the awakening for silver, not just for us gold bugs and silver bugs, but for the general public. I think we're just beginning. As you can see, since the beginning of February, the bullion banks, the powers that be, have been able to drive the paper price of silver lower. So we've had the condition of a downward trend, which when you have a hammer, it is bullish, a very similar pattern to the one in gold. So yes, I think it's quite encouraging. Of course, time will tell. What about the Fibonacci retracement for silver? Well, as you can see here from the bottom last year, just above 11 to the top in August last year, just below 30. Yes, we had a top above 30 overnight, Sunday to Monday in the beginning of February, but I will take the top from August last year as the top for the Fibonacci analysis because I think the new top we made in the beginning of February it didn't stay there for that long. It wasn't really significantly higher, but it wouldn't have made much difference. But you can see that the 38.2 retracement, we're still very far from it. It's around 22.78. Yesterday, I think we closed just around 25 or just below 25. So I think in terms of the Fibonacci retracement, silver has done even better than gold because we haven't really been able to test that level so much this year. Yes, it did test it last year, but I think it shows quite a bit of strength in silver as well. So before we finish, just wanted to show you the last time we had like a hammer formation in gold and silver. So as you can see here, back in March of 2020, after we had the big drop from around just above 1700 down to around 1450. Yes, gold did rally from that low, but we did get a hammer here back in the end of March 2020. As you can see, that's a hammer. And look what happened after that hammer. The market never looked back and went from just above 1600 to 2000. The same thing happened in silver. If we go back to the March period, you can see the top in February of 2020 and the big drop towards that 11 handle, big drop in silver. where very few people actually could get physical silver. I was able to get a few coins on that day. I was shocked. That was the day as well that the gold silver ratio went through the roof. I think it went to 125 or something like that. It was probably the biggest opportunity to buy silver, physical silver, if you could get some. Of course, it was a big opportunity for the bullion banks to cover their shorts. But if you go forward a couple of weeks after that bottom, at the end of March 2020 as well, you've got a hammer in the silver chart here, in the weekly silver chart. And look what happened to silver after that. Never looked back really, and went from just above 14 to a high of 30 in the next few months. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great long Easter weekend. Take care. Bye.